Good evening. My name is Ayush Alavadi. This is Bloomberg Quint, and you're watching What Did You Miss? Let's get straight to the headlines. Now, the Cabinet clears the ordinance recommending changes to the Insolvency and Bankruptcy Code. A final approval from the President is awaited. The Supreme Court refuses to stay an earlier order which had asked Jaypee Group to deposit 2,000 crore rupees but allows the debt trap group to do so in installments. After Dawber, Godrej Consumer cuts prices of its products by 7 to 10%. This after the government pulled up FMCG companies for not passing on the benefits of lower GST rates to consumers. And the Indian equity benchmarks rose for the 5th day in a row, posting the longest winning streak so far this month. HDFC and ITC were the top gainers. Patidar leader Hardik Patel has declared his support for the Congress party. He says PAAS accepts the formula given by the Congress to provide reservations. The Cabinet has cleared the ordinance to amend the Insolvency and Bankruptcy Code. The ordinance has been sent to the President for his approval. There have been several news reports on the possible changes to the IBC, including preventing promoters of companies that are under the insolvency process from bidding for stressed assets. News reports also claim that the amendments could reduce the interference of the Competition Commission in deals struck at the IBC. Listen in to Finance Minister Arun Jaytee.
Some changes are proposed to the Insolvency and Bankruptcy Code. Since this is being done by an ordinance, till it is approved, as a matter of propriety, we don't give the details. But the fact that the Cabinet has recommended to the President is an information that I am giving you.
Well, the Cabinet today also approved the policy framework for central public sector enterprises to negotiate the next round of wage revision with their workers. The government will not provide any budgetary support in case of a wage increase, and the CPSCs would have to bear this cost. Further, the management of CPSCs would have to ensure that the negotiated scales of pay do not exceed the existing scales of executives and non-unionized supervisors of the companies. Now, the judges of the Supreme Court and High Courts in the country are set for a salary hike. The Union Cabinet today approved a proposal in this regard. Law Minister Ravi Shankar Prasad said that a bill would be introduced in Parliament to effect the pay hike. This comes after former Chief Justice of India T.S. Thakur wrote to the government last year seeking a hike in salaries for Supreme Court and High Court judges. Currently, a Supreme Court judge gets a take-home salary of nearly 1.5 lakh rupees per month after all deductions, and a High Court judge gets a much lesser amount.
The benefit of pay revision shall be given with effect from 1st of January 2016. And the benefit shall extend to 31 judges of the Supreme Court, 1,079 judges of the High Courts, and about 2,500 retired judges. So it relates to salary, pension, sumptuary allowance, house allowance, everything.
Indian markets ended with gains for the 5th day in a row. This is the longest winning streak in this month. So far, both the Nifty and the Sensex posted slim gains. Zee, Adani Ports and GAIL posted significant gains, while Tech Mahindra, Bajaj Finance and Hindalco incurred sharp cuts. Pradeep Pandya standing by to take us through all the action on the Lal Street. Pradeep?
Well, the trade remained range-bound if you look at the index, Sensex or Nifty in today's trade. In fact, Nifty for a 3rd or 4th day in a row struggled around 10,350 to decisively cross and close above that level. So there is definitely hurdle, and bears are trying to hold on to these levels. Even if you look at mid-cap and small-cap, the index didn't move much. But if you look at stocks, there were several key stocks, and we'll talk about that. But before that, let's look at what happened to Nifty Bank, which also has remained stagnant for a while now. And India VIX, that is most important, because some traders feel that, with India VIX moving above 14 once again, this could be one of the reasons why indices are finding it difficult to move up from current level. And if VIX corrects, maybe we'll see further up move in Nifty and Bank Nifty. To talk about some of the prominent gainers today, HDFC and SBI were the key heavyweights that were driving the index on the upside. If you also look at the key gainers among the large caps, Zee Entertainment was a prominent gainer, and also Adani Port. To talk about the next rank, Sun TV and United Spirits were two prominent gainers. In fact, United Spirits was not alone. In fact, it was not even a top gainer. There were mid-cap liquor stocks that have been doing well and continue to outperform the market. To talk about some of the high beta names in today's trade, Jaypee and RIIL moved once again. Both these stocks had moved up 2 days back when the Trans-Harbour Link order was allotted to L&T, and then they corrected steeply. So these two are high beta stocks. They have been moving both ways over the last 3-4 sessions. To talk about some more high beta names, BF Investments and BF Utilities, two prominent stocks of Baba Kalyani Group companies. They have also been buzzing for a few sessions now. In fact, towards the end of the session, we also had some more stocks moving up, and we'll talk about it. But before that, let's look at the auto ancillary sector. So Talbros Auto, after good numbers. Recall, there is no particular reason as such, but this stock has been really strong and has been moving up for a few sessions now. VIP Industries, that was a prominent gainer towards the end with extraordinary volumes. And Team Lease, after Quest Corp moved yesterday, it was Team Lease's turn today. In fact, there was a block deal yesterday that was reported, but markets came to know about it only later in the day, that there is a prominent institutional investor who has come in through that block deal, and therefore there was this follow-up buying interest. In fact, some of the high beta stocks are kind of signaling froth in certain pockets in the markets nonetheless. Let's look at some of the key losers. Real estate, so IBRL, and also you had Jaypee Infra losing 5%. This happened towards the end of the day. Now some traders believe that this could also be because the amendments in the Insolvency Act, because if promoters are asked to stand aside, maybe the final valuation that the market or the auction process arrives at might be lower in that scenario.
Right, Pradeep, thanks so much for that markets update. But that was today's markets action. What about the next year? Markets are set for a correction in the next 6 to 12 months. That's the word coming in from Value Quest Ravi Dharamshi. In our special series, Alpha Mughals, Dharamshi says that he believes that it would be better to stay invested during a market correction. Here's a slice of that conversation.
Statistically speaking, we've been in a 8-9-year-old bull run. We've seen really low volatility. So there is likely to be a big drawdown sometime in the next 6-12 months. I can't put my finger on it when, what is going to cause it, no idea, but that's going to happen. But the more pertinent question is, should that be looked at? Is that a reason I should be worried right now, or is that something I should be, looking at as an opportunity? Because finally you need to figure out, is that going to be a correction and in which you should be investing, to generate returns over a 3-5 year period. So I am more from the camp that, yeah, there is going to be a drawdown for sure, because we have seen too low a volatility for too long. So, but I think that should be a good opportunity to invest.
If we speak to global investors, Ravi, almost all of them believe that while valuations may be rich in India, and while there could be a correction which would be ideal, they do not foresee a reason which would make India correct in isolation. They believe that it would have to be an emerging market correction or a global market correction which leads India down. They don't foresee any local factors, and of course they didn't speak about the elections per se, but they don't foresee any local factors which can pull India down. Would that be a fair assessment, do you think?
Really, we shouldn't be worried about the factor, but okay, the genesis of this bull market is global. So, and we are part of the global bull market. It is not like we are rising in isolation. So definitely the pull out of money, if it is going to happen, it will most likely happen globally, and will be part of the correction that happens globally. So we have had tremendous amount of liquidity being pumped in. There are first signs emerging of liquidity abating in US. Yet Japan and Europe still continue to pump in more liquidity. So on the margin, liquidity is abating. So that could be a reason for a correction at some point. But and we'll be part of that. I mean, if there are local reasons, that can only accentuate the situation. So I agree with that assessment.
Okay, one premise though, over the last 12 to 18 odd months also has been that the cost of equity, or maybe longer than that, the cost of equity has been so low that has driven participation that has driven risk, and that is, well, simply put on an Excel sheet, your target prices would inch up higher, your P multiples would inch up higher. Would that change now with all that's happening around the world, with all that's happening in India as well? Would the next leg of growth for almost any company, any bottom-up story, be a question of earnings delivery alone, as opposed to it being a factor of earnings delivery come a PE re-rating? Has the re-rating story played out already?
I wouldn't say that. It has played out to a large extent in a lot of companies, but it's not like it has played out in every possible company. So just to give you an example, there are sectors bombed out sectors where stocks are down 50-60%. There are companies out there in real consumption, which is a secular theme, which is down 50% just like a couple of months back. So if you can find a good combination of company that is going through a tough times and where the improvement is happening on the balance sheet as well as in the P&L on the margin, then I think you can still get that PE re-rating as well as earnings growth from a next 3 to 5 year point of view. So I won't say that opportunities have dried up. They're fewer for sure.
Well, that was just a sneak peek into that conversation. You can catch that entire conversation with ValueQuest's Ravi Dharmshi at 10:30 a.m. on Thursday. Now, moving on, Goldman Sachs has a new report on India. The brokerage house expects growth to pick up and inflation to accelerate over the next 2 years, forcing the RBI to hike interest rates. Darshan Mehta has been going through that particular report, and he gets us all the details.
A lot of takeaways because they speak in detail about each and every parameter, be it the GDP or the bank recapitalization or the GST. Let's talk about the GDP first. So their estimates for FY19 is 8% GDP and for FY18 is 6.4%. So this is the broad consensus that they have as far as GDP is concerned. It's much ahead than the Bloomberg consensus. What are they talking on GST? They're saying that the negative impact of GST will fade in the coming years. There were 200 items in which the GST rates were cut down significantly, and that will benefit and accelerate growth over the next 3 to 6 months. So that is positive as far as the GST is concerned. As far as the bank recapitalization is concerned, they believe it unlocks credit and boosts private investment. So these are the broad contours they believe, and borrowing cost will also come in much lower because of the bank recapitalization. The next part that they speak about is what will drive the economy. The first part is the wage hike that happened. That will drive the consumption demand. And as far as the infrastructure and investment demand is concerned, that is where infrastructure, especially road and affordable housing, come in, and that is something that will push demand for the Indian economy. As far as what are the risks, obviously any kind of delays in GST related effects and the bank recapitalization puts a spanner as far as the entire assumption is concerned. They also talk a lot as far as the other inflation, RBI is concerned. So inflation, the headline inflation could be for 5.3% in FY19 and 3.4% in FY18. So this is their inflation, and food prices and commodity prices will drive inflation much higher according to Goldman Sachs. The next point that the point is core inflation. It will be 4.8% for FY19 and 4.4% for FY18. This is their assumption that they have worked out with. Now, as far as RBI is concerned, 75 basis point increase is something that they see by mid 2019, and these are the parameters they believe that first one will come in the third quarter of 2018 and the last one in the second quarter. So 3 continuous quarters of rate hikes could come in. Apart from it, on the current account and the rupee, the current account deficit is, according to Goldman Sachs, looks manageable, and the rupee they believe will appreciate significantly against the dollar. That is what they are talking about, and the current account deficit probably will widen to 2.1% of the GDP in FY19. So these are the broad contours that Goldman Sachs has spoken about in the report.
Well, it turns out it's an interesting time to go grocery shopping soon, because Dawber India is passing on the GST rate cut to consumers. The FMCG giant slashes prices of its products by about 9%. In fact, Dawber CFO Lalit Malik explained that though consumers will see prices drop by about 9%, the margin pressure the company was facing will not lift for another 3 to 4 weeks. When a 28% GST rate was applied, the company held product prices and absorbed the additional 7% in tax cost. While a reduction in the GST rate to 18% should help restore margins, the company has decided to instead reduce consumer prices on existing stock and continue to take a hit on margins. And the current inventory will last for about 3 to 4 weeks. Listen in to what he had to say.
Our effective rate was somewhere between 21 to 22%. By increasing it to 28%, we actually lost post GST, which we absorbed. We did not pass on through price increase. So we were post GST from July till November, we were in fact losing out on the margins on account of these categories. However, now coming back to 18, we are passing on. So therefore, the loss that we were having earlier gets neutralized. On the existing products, we have slashed the price. So though the MRP is same for the finished product, the price to the consumer and to the distributor that we are giving is now at a lower rate, and going forward for the fresh production, we will be reducing MRP. So in effect, the real benefit will be passed on in terms of price reduction to the consumer.
Well, it turns out Dawber isn't the only FMCG company that is cutting prices. Godrej Consumers has also cut prices of its products by as much as 7 to 10%. This after the government pulled up FMCG companies for not passing on the benefits to consumers. Godrej has said that the price cuts will be on products such as hair color, air fresheners, liquid detergents and deodorants. These reductions will be effective immediately. Like we told you earlier, the Cabinet has recommended changes to the Insolvency and Bankruptcy Code. Nikunj Ohri joins us on the phone line for more. Nikunj, we know that the ordinance has been sent to the President now, but what are the changes that we can most likely expect?
So some of the changes that the government has proposed is prohibiting willful defaulters from participating in the Insolvency and Bankruptcy Code process. So they wouldn't allow willful defaulters to bid for these assets, and the committee will consider the viability of the resolution plan. That is something that the government is considering, and this will be this has gone for President's assent, and the President is likely to give his assent tonight itself.
Right, Nikunj, thanks so much for that update. We'll get back in touch with you on the evening shows as well. Well, on to the latest in the Jaypee home buyers case. The Supreme Court has refused to stay an earlier order which had asked Jaypee Group to deposit 2,000 crore rupees in the Apex Court. But the Apex Court, however, allows the debt-trapped conglomerate to deposit the money in installments. Arpan Chaturvedi, my colleague, who has been tracking this case, gets us all the details in this report.
Well, the partial relief that has come from the Supreme Court for Jaypee Associates is that while there is no change in the order to deposit the 2,000 crore that it was asked to deposit by the court, but the Supreme Court has now said that they can deposit that amount in specific installments, and as after today, Jaypee Associates deposited 275 crores, and the next installment of 150 crores will be due in December, and so on. The Supreme Court has also placed restrictions on the Jaypee independent directors, promoters and their immediate family, and has said that they will not be able to alienate any of their personal assets until the further orders of the court. So that's the main outcome of the hearing today. The next date of hearing will be held in January, and the Supreme Court has mandated that at the next hearing as well, the independent directors will have to be present in the court.
Moving on to the big national story of the day, the Gujarat elections. Today, Patidar leader Hardik Patel has declared his support for the Congress party. Patel said that the Congress has accepted the demand of the PAAS to provide reservations for the Patel community. Speaking to reporters, Hardik Patel said that the Congress will include the extension of reservation benefits to Patidars in its election manifesto. Patel also said that PAAS accepts the formula given by the Congress to provide reservations for Patidars on par with the OBC and non-reserved categories. Meanwhile, Finance Minister Arun Jaytee today reacted to the Congress's alliance with Hardik Patel's led PAAS, calling it a club of mutual deception.
From the statements that I have seen so far, the Congress Hardik Club is one of mutual deception. The law of the land is very clear, and that's laid down by the Supreme Court. And only last week in the Rajasthan case, it has been reaffirmed that the 50% cap can't be breached. So they can continue to mutually deceive each other and deceive the public by saying that we will devise a methodology of breaching the cap. Legally and constitutionally, that is not possible.
But with that, it's a wrap on this edition of What Did You Miss? Thanks so much for watching and stay tuned to Bloomberg Quint.